Hey everybody, this is Jim at SP500chart.com. It is after the close on January 9th, 2013. And before we look at the chart, I need to remind you, as I always do, that the website and the video are for educational purposes only. Nothing stated at the site or in this video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I'm not a licensed financial professional. I'm just a guy who draws lines on charts. So let's take a look. First, looking at a 15-minute chart, all I have to say today is whoops. I really thought this market was primed to come back down to the mid-1440s and that it was not going to break out over this top resistance line. Caught me by surprise. But now that we're over that line, we have to call it as we see it, meaning now we turn this line into likely support. So this did not play out as a bear flag. Now the question is, since we've been fooled once, are we going to get fooled a second time? Is this going to play out like a bull flag? Well, I can tell you it's got pretty good bull flag shape to it. Slightly wedge shaped, like you like to see them, frankly. And ended the day with the slightest little nudge above that top line, which frankly is kind of inconsequential. But to call it like it is. Looks like we've broken out here, and are we going to get a back test to this broken line? You know, we usually do, but not always. So here's the deal. Instead of trying to get too cute with all these little patterns on the 5-minute chart, for me personally, I'm going to step back, and what I'm going to do is look at this trading range between 1470 and call it 1440. And my feeling is, based upon the chart, that we have support in the low 1440s, and we have resistance around 1470. So what the market does in between here is not going to concern me so much as what the market does when it gets outside of this range, because I think that's where the next decent sized move will come from. In a perfect world, I would love to see the S&P even extend. Would love to see the S&P stay within this range, maybe even near the end of January, have some weakness, come down to the 1440s, making this a nice symmetrical inverted head and shoulders pattern. But the long and short of it is that we are still in between what I think are important levels of support in the low 1440s and important levels of resistance around 1470. So, you know, that's just kind of the only way I can think of playing this is to wait for one of these things to happen. Maybe start a position if we get down to the 1440s. Maybe start to go long there with a stop at this line down here, wherever that line might be. Keep that stop there. Or upon breaking out over 1470 on volume and, well, forget the on volume part, on a good unmistakable breakout, then that should signify that the S&P is ready to plow significantly higher. But for right now, while we're in between these two areas, I think I'm pretty much just going to stand pat with what's going on with what I've got. And but if we get down to this low area here, for example, if we were to come back in a couple days and back test this line down in the 1440s, I would look upon that as probably a buying opportunity, despite the fact that it looks a little scary from having had 6 days in this range here. One might expect a little bit lower target if we break down into that level. But just because of this neckline right here, that here's our neckline from what we thought was going to be an inverted head and shoulders, and also essentially the neckline from our triple top that we're now back over. So just a number of reasons. I think I'd probably start going long around 1440. And if it were to happen in late January, then I would think that would be an ideal situation, because there's multiple reasons in the chart to jump on that. We got this rising support line here. We've got this this descending line off of our triple top highs. We have this triple top neckline. We got which is also the neckline for what I thought was going to be a fairly large inverted head and shoulders here. So all of this is kind of morphing into something a little bit different over here on the right side. But again, I would love, you know what I'm saying, I would love to see this thing shape up and become a more complete and more symmetrical inverted head and shoulders pattern. Let's see if it'll do that and do us all a big favor. But until then, I'm just gonna make I'm not probably not gonna do much, as long as we're between 1440 and 1470. Get over 1470, then that's a sign that the market wants to plow higher. Get down to 1440 with signs of firming up, and that's a sign that the market will reverse and go back up and test 1470 again. So guys, that's the video for Wednesday, January 9th. Let's keep our fingers crossed that we get something very tradable and very, I don't want to say predictable, because you can't predict anything with absolute certainty. But let's keep our fingers crossed that we end up with a pattern that has enough features to where we can put reasonable confidence in it. So look guys, thanks for watching. Take care.